So if you're a successful business owner and you have children, you might be wondering to yourself, how can I teach my children the same sorts of financial skills that help me experience this kind of independence in life? And at the same time, you might be wondering to yourself, is there a way to do so while also saving on taxes in the meantime? Well, the good news is that yes, there is a way, and this week we're going to talk about how in depth. Hi, I'm John Norberg, and welcome to the Financial Prof series. So if you watched last week's video, you probably know a little bit about how yes, you can in fact hire your children for your business, and depending on your situation, it can make a great strategy to introduce your kids to the business that you founded, while at the same time being able to save a substantial amount on taxes, potentially, depending on your situation. So this week, we're going to talk about this strategy in a little greater depth and detail. What do we do now that we've hired our kids to make sure we're getting the most out of this strategy and the legwork that it involves? So there are 5 layers to this strategy to make sure you're taking the best advantage of it possible. Now, keep in mind, this is not tax advice. I recommend always that you talk to a tax professional about these strategies, but I work with a number of tax professionals who have implemented these strategies for their clients and seen great results as having done so. So let's talk about this. Layer number 1, when you hire your child, you're able to deduct whatever you pay them to the business. So let's say you hire your child and you're paying them $14,600. In this video, it's 2024, so we're going to assume you're paying them up to the single filer limit standard deduction, which this year is 14.6K. So you deduct that to the business. So that's layer number 1. Layer number 2, that 14.6K, there's a reason we're using that number, can be fully deductible to the child. In other words, it's tax-free income from a federal perspective if they're under the filing limit for single filers, which again this year is 14.6K. They can write it all off without having to pay a dime in taxes on it. Now, like we talked about in last week's video, payroll taxes may come into play depending on your entity type. So if you have not watched that video from last week, go back and watch Maximizing Tax Breaks, How to Hire Your Children. So layer number 3, again, layer number 2 is making sure that that limit is in place so that it's deductible to the child. Layer number 3 is, now that we've got that 14.6K sitting there in the child's name, we can contribute that to a Roth 401K, or rather, they can, with maybe a little direction from mom and dad. That now becomes money which grows tax-free for the rest of their lives until they take it out, as long as they wait until the limit, which for us right now in 2024, you have to be age 59 and a half to take that money out tax-free. Now, there is a quick trick in here that I do want to make sure you guys are aware of. When it comes to a Roth 401K, if you were, say, for instance, to at a later date in time, roll that over to a Roth IRA, maybe get a few more investment opportunities through that. You can also take out the contribution limit. So let's say you put in 14.6K and it grew to potentially, say, $20,000. Your child could take out that original contribution, 14.6, without fear of tax penalties because that's already been accounted for. So anyway, layer number 3, contribute that 14.6K to a Roth 401K for your child. Now layer number 4 is the company match on that 401K. So most companies these days have an employer match of some kind, usually in the 3 to 5% range or so, or even more if you've got a profit sharing plan bolted onto that 401K, for instance. And in that case, you're writing off obviously whatever that match into the 401K is from the business. So that's layer number 4. And then finally, layer number 5, using that same income base of, again, 14.6K, you can now contribute to a Roth IRA outside of the 401K on the child's behalf of up to this year $7,000. So all said and done, you can contribute $21,600 to Roth-oriented investments, accounts. And what that means is now that money will grow tax-free and be distributed tax-free as long as they wait until they're at least age 59 and a half, according to current regulations. So now that we've talked about those 5 layers, let's explore just a little bit what this might look like if this strategy is carried out to its fullest. So if you contribute 21.6K per year, and you do that, let's just say, over the next 10 years, and this isn't even accounting for the employer match part, right? We're just assuming a straight 14.6 plus 7K to the Roth IRA. So that's how we arrive at 21.6K. Over the next 10 years, assuming a potential growth rate of 7% per year, that money could potentially grow to around $340,000, again, potentially not guaranteed, over a 10-year period. Now, let's take that out over the next 45 years. Why 45? Because if your child is, let's say, 7 years old, they do this strategy with you for the next 10, and then we add 45 to that, that brings us to age 62, which according to current regulations, that's when you can claim Social Security. So a lot of people tend to retire in the early 60s. So if we use that $340,000 or so as our starting base amount, by the time that we get to age 62, and assuming that they haven't even contributed anything in the meantime, that money, using that same 7% assumed potential growth rate, could, by the end of that time, 45 years later, and again without adding a single dime further, grow to over $7 million. This is how people build generational wealth. This is how people achieve financial independence. This is how we teach our children good financial habits that hopefully stick with them to the rest of their lives. Because here's the thing, if they are contributing in that next 45 years, this only sweetens the pot further. So, if you have questions about this strategy or how it might work for you and your business and your children, give us a call or drop us a message. We're happy to talk about it. But in the meantime, I'll see you out there.